Welcome back. We are now segment 5.10, and in this segment we'll be discussing interest. Okay. So when it comes to interest in a P&L account, you'll find a number of items pertaining to interest, right? I'm not saying in every P&L account you're going to find all various items of interest, but when you do a few number of proposals, like say 10 to 20, you'll be finding a number of interest items. You'll find interest under various names, like interest on loans, like interest on term loan, interest on working capital, and then you have something called interest on. These are all anyway related to bank. Then you have something called interest on unsecured loans. You'll find something sometimes called interest on partners capital, right? So you'll find various interest on dealers deposits. So you will find various items related to interest. So in the CMA data, under the item of interest, you should know which are the interest items out of this, whether you have to take all into this interest or any particular item. So this is important because this interest is a very important input. This is an input to a number of formulas in the when you come to actually the financial ratios. We'll be calculating a number of ratios in a later in the later chapters. So there, interest is a input to many important ratios. For example, interest, there's something called interest coverage ratio, right? There's something called DSCR. So there are many ratios, key ratios, which takes interest as an input. So if you don't classify this correctly, right, you will get the ratios incorrectly, right? And because these are very important ratios, you should take every care to ensure that the interest which are entering in the CMA data is the a correct interest. So even though you find a number of items, you should know which are the items that should go into interest. Not every interest gets into the interest on the CMA data. So let us see what are the items that we have to classify under interest. So as I told you earlier, there are a number of interest items. So in case of partnership firm, you'll find a item called interest on partners capital. Okay, interest on partners capital. Then if the firm has or company has taken unsecured loans from directors and friends and relatives, then there'll be something called interest on unsecured loans. Say a company like Bajaj Auto has a number of dealers, so it will take some deposits from them, and maybe is going to pay interest on them. So that those dealer deposits interest will be an item in the P&L account, interest on dealer deposits. So we should know which are the items that we have to consider while calculating, while classifying interest under the CMA data. In the CMA data, what are the items that we have to enter into interest, right? So please remember, when we say interest in the CMA data, we refer to only interest to banks and financial institutions for loans and credit facilities available. So the company might have borrowed from other sources such as unsecured loans and many other sources, but interest on those items will not come under the interest item of CMA data, right? Interest item of CMA data. So whenever you come across the term called interest on partners capital, right, or interest on unsecured loans, please note that these items will not come under the interest under the CMA data. So this will go to the non-operating expenses because these have not, they have got nothing to do with the operations of the company. So this will be going to the non-operating expense. So only the bank interest loans related to the repayment, loans from banks and financial institutions for which the company has availed certain credit facilities will be classified as interest. So if you recall our discussion we had in under selling general expenses, there we said there will be separate item called finance costs. So finance cost comprises of both interest and bank charges. So we discussed in that chapter on selling and general expenses, interest will be going to the interest part in the CMA, and bank charges has to go into the selling general expenses. So this we are going to see in this example of Maruti Suzuki. Here we can see that finance cost is broken down into these segments. So interest on foreign currency loans from banks, buyer's credit and export credit, deposit from dealers, contractors and others, and other borrowing costs. So in the interest under the CMA, there is a row called interest. So what are the items you have to enter? For this example, only the first two items, right? That is the foreign currency loans from banks and the export credit. These are the only two items we'll be entering under the interest. The rest two will be classifying under general expenses. So the deposit interest on dealer deposits and other borrowing costs will be classified under general expenses. So under interest, let us enter 15 plus 270, that is 288. So 28.8 crores we are going to enter under interest in the CMA data for Maruti Suzuki. So 28.8 crores. So please see that the CMA data has got some provision for interest on working capital and interest on term loan. So this breakup, if it is available, you can split it under the corresponding heads. If it is not given, Because you are the banker, because you are the banker, you are the bank that has offered credit facilities, you'll be having a good idea what are the facilities. So if it is given, you know what is this facility. So you know if it is only a single facility, you know what is the facility, you can put it under the corresponding head. If it is a new company, you don't know what exactly is this interest, the breakup you don't know, then it's better to put it under interest under term loan, right? I mean, again, it's an option available to you. You can put it anywhere. You can put it anywhere. Some split it under two. So 28.2, 14.4 here, 14.4 here. I mean, you can do a number of ways, but usually you put it under interest on term loan. And the balance 259 plus 5, right? 259 plus 5. Let us put it under the general expenses. That is the interest on deposits from dealers and other borrowing costs. So 26.4 crores, right? Let us put it under general expenses. So 26.4. Selling general expenses, we already had a total of 1491.8 crores. This we already discussed in the chapter of selling general expenses. To this we'll now add 26.4. That is the interest on dealer deposits and other borrowing costs. So this we can put under general expenses. So these two put together, 1491.8 plus 26.4, that is 1518.2 crores is the total selling general expenses, right? So with this we come to the end of this chapter, in a short chapter. But the actual importance of interest will be coming when we discuss financial ratios. When we discuss about concepts such as DSCR, there you will have a detailed discussion of interest. The other item of interest, a very important item, is IDC, that is the interest during construction. So the IDC we didn't discuss here because it's actually pertaining to when we have the discussion on term loans. There will be having a discussion on IDC, because this is an interest and you might feel this has to be discussed in the chapter of interest, this is more relevant for the term loan because IDC will be capitalized, right? We'll discuss about capitalization later. So there is one more interest which you need to remember: interest on term loan, interest on working capital, interest on unsecured loans, partners capital. So along with this interest, there is something called interest during construction, right? So this is something we'll discuss in a later chapter when we discuss some of the term loan assessment, right? So for the moment we'll close this segment, and in the next segment we will continue our discussion of the expenses under P&L account, and in the next segment we'll discuss about non-operating expenses, right? See you then.